Well, g'day there, traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me in this weekend market address. I haven't performed one of these analysis sessions in quite some time. I do have a little bit of spare time on my hands at the moment, so I'm more than happy to provide you with the following market overview. This is not going to be a recap of our top 12 individual trade lists on the left-hand side of my screen over here in our watch list. This instead is going to be more so that of a market overview and what to look for moving forward. We are rather delicately positioned, not only on the Nasdaq, but also on the industrial average and the S&P 500. And if we look outside of these three closely followed indices, what you're going to find out also, or at least come to the conclusion, is that the Russell 2000 is also retesting a critical area of rising support, that rising support being the trend line that we have established since the month of April 2018. What has been working wonders for these markets since basing after the waterfall sell-off of January into February is that the markets have stabilized, and again since April they have been printing a series of higher lows and higher highs. This is the textbook, once again, continuation pattern that we look for in financial markets, whether it's the indices themselves or individual trades. But what you can see right here is that the Nasdaq is really beginning to retest and touch this area, this rising area of support, more times than what we are generally comfortable with. And it really poses the question at the moment, well, is this market finally going to see that compelling rally off from this rising area of support? Of course, that is what we would like to see happen in the financial markets. However, what we do not find ourselves being right now is complacent. And really, when I use the word complacent, what I'm really just leaning towards, or at least opening the portal for something to actually alternatively occur, is, well, what is the case scenario if we do definitively see that of a dark candlestick from more or less this current position? It may happen from higher prices. And what this would mean is that it would open up the markets for potentially that of an intermediate sort of correction back down to lower areas of support, noticeably here on the Nasdaq down at 7,520. These are really the two scenarios that are going to occur from where we currently are trading. You can see on my screen over here on the right hand side, 8,046 on the Nasdaq. But again, if there's one thing you can take away from this market analysis that I'm leaving you with right now, is to pay very close attention to what the candlesticks do and obviously what the price action does for really the first half of this week. Whether or not we can actually hold above this rising trend line, that would make us all very happy for the trend continuation. And when I look for the trend continuation, we are going to want to be looking for uniformity, not only with the Nasdaq breaking out, but also the industrial average and the S&P 500. That is going to be the criteria, the checklist that we will have prior to entering into any bullish trades moving forward. Now, on the contrary, once again, if we see this rising area of support break, which is what we're really retesting once again for, I mean, we can call it 1, 2, 3, 4, 5, 6, maybe 7 or so sessions. If this area breaks, and then this horizontal area breaks a little bit lower down here at roughly 7,925, and then this little swing low area of support is taken out, well, again, you can see this market move into a retracement very similar to what we saw at the beginning of January, and that really freaked out a lot of market participants. They weren't really expecting that of a correction. It's more so really nicely presented in that of the Dow Jones, as you saw that waterfall sell-off just here down to this area of support. But again, that is a very realistic probability of playing out if we do see the definitive cracking of the rising support area and also the horizontal area of support. Until this occurs, you have to remain relatively bullish in the market, or at least your approach to the market should be somewhat bullishly orientated. But that doesn't necessarily mean that you want to jump into, immediately speaking, a bunch of bullish trades. You want to wait for market confirmation to take out the swing highs collectively, okay, before actually allocating capital, active market capital, into live wire trades over here on the left hand side of my screen, but also to whatever stock that you may be looking at outside of this list and outside of the analysis that we cover in that pro analysis class. Now, again, a very interesting parallel underway at the moment. This is the Russell 2000. If I change this out to the weekly chart once again, you can see that we have accelerated away from this sort of decelerating fan line. This is essentially an angle of ascent of a primary trend that is happening with a little less velocity to it as to what we've currently seen for the calendar year 2018. Since that waterfall sell-off, we've come on back down and we've been in quite an aggressive type of bullish trend, which is really good, very favorable, and it's been quite nice for those who've actually been taking Russell trades. Most recently, all the way back at 1.5 and 1.6 on my screen, which was that of that ascending triangle. Now, although we haven't got all the way up to our target on this is all the way up here. If I can move my screen over, if it wants to work with me, I might need to bring it back down into perspective at 1,756. What's more important right now is, again, this retest of this rising trend line. This is the extension of the trend line. You can see over here, the blue line turns into a red line and then it becomes a projection. Well, you can see that the difference between Thursday and Friday is potentially the first recognition of this rising area of support. But what makes this interesting, however, is that we've got a very detailed, right, area of resistance that was acting as, of course, support. However, on this particular candlestick just here and on rising volume, we did begin to definitively, albeit short term for the time being, actually hold below this area and continue a little bit lower. So is this potentially a little bit of a forewarning for what is actually going to occur on the Nasdaq potentially this week, or the Dow or the S&P 500? Well, I don't have that answer for you, but again, these are the clues of the market, a little bit of a blueprint of its DNA that it is leaving behind that we can somewhat suss out and really pick up on potential fragments, all right, or at least divergences that may warn us to ultimately the break of these support areas, which is going to be somewhat problematic for market participants who are simply not factoring in potentially, something like that actually occurring. So again, if I go through some of the templates that we like to use, you can see, well, technically we are still trending above these exponential moving averages. Yes, I understand temporarily we are below that of the rising 50, but we've only been below this for 3 sessions, and this is not a definitive move. You want to be paying attention again to that rising bullish area of that trend line just there. Now, if I go back into the Nasdaq again, you can see that the candlesticks are above the rising exponential moving averages, but at the same time, we're not really getting that definitive push off from this rising area of support. So again, we've been largely neutral for really the majority of September. We didn't jump into any of these bullish trades above the swing highs on the Dow Jones Industrial Average. In fact, our target on the Dow has been 26,435, and this is taking us all the way back to the gap over here at the very end of January, before we began to see the waterfall sell-off. Since we established this, or this set up in the month of February, our entire thesis really on the market has been, well, that slow and gradual grind higher to close that open window, so we can say effectively goodbye to what has been, somewhat of a frustrating type of chapter when it comes to market movements, price sensitivity, and the market's not moving as nicely as what we have come to expect of them for the past number of years. Well, we have now definitively closed this window. You can see the markets are gravitating, or at least the industrial average is gravitating back to 26,435, and this is looking like some form of a bull flag as well. So again, markets are confused. They're not in alignment. They're not giving us the same confirmation signals of pushing to fresh new all-time highs. They have pulled back. And again, they are looking a little bit tentative around these rising areas of support. And that's essentially our outlook when it comes to the markets, until we see either them breaking out in unison, or unfortunately breaking down below those trend lines, most noticeably on the Nasdaq. I do like the Nasdaq of really those 5 markets. If you take into consideration the transportational average as well, I think it is the most definitive, the nicest chart when it comes to support and resistance. That is what we're looking for in terms of criteria before, again, we begin allocating capital back into this market. Sometimes the best form of attack or even trading plan is to simply sit back and do nothing. And as other people, the buyers and sellers, actually battle over, I guess, the direction and control of the market, we'll just simply sit back and wait for the market to actually break in one of those 2 directions before we jump on board with that directional move. And it really is the smartest way, in my opinion, to be trading the market, especially when it comes to swing trades as well. Now, as I say this, and as we've gone through some relatively neutral sort of market outlooks, we've posed both the bullish and bearish sort of outlook. Again, it's very similar for the transportational average as well. A lot of these markets have made all-time highs either in the month of September or August, and they have pulled back. So on the surface, it looks as though we are just going through that breakout 1, 2, 3, and then continuation above the swing highs. And again, The best case scenario for market participants, right, is to just continue to the upside. It doesn't always play out that way, unfortunately. And what I mean by that is if we begin to see definitive selling more or less around this current pivot at 11.3, 11.4, well, you can see this really defined sort of target once again, another rising area of support on the transportational average, which I really like as well, very similar to what we're seeing on the Nasdaq, which could potentially take us all the way back down to 10,710 quite comfortably. It would be a rather sort of minor market drop for the transportational average. However, it probably would begin hitting on a little bit of nerves for market participants who simply don't control their emotions when it comes to trading, unfortunately. But that is also a very realistic sort of path that we may go down as we move into the month of October. So again, very neutral outlook, very important time for the markets. The good news is that we are going to find that of a definitive type of movement sooner rather than later. And the reason I say that is because we're getting very close to this rising area of support. And it's very rare when you research and do some study around this that you just simply walk a trend line. It's either you get that aggressive move off from it, or you see quite spectacular collapses once you break below it. And if you look at a lot of these other companies, I mean, I'm sort of limited as to what I can show you. There is general weakness out there when it comes to some of these FANG stocks and also social media companies. I did speak about this over the weekend in Pro. And again, I encourage you to have a look into that class. It is up online. I did record that yesterday. It went for about 1 hour and 50 minutes. So it was a little bit longer than what I generally take, but I was really going into it in quite depth or in quite detailed sort of analysis. But even when you look at a lot of these tech companies, I mean, first of all, when you look at this on the weekly chart, we've got a shooting star essentially sitting right on that of a bullish trend line. That is not a bullish signal for Facebook. Generally, when you come on back down into support, all right, you get these big weekly candlesticks in very quick sort of movements away from them. This isn't a great example here towards the back end of 2016. But again, over here, most recently in 2018, 2 weekly candlesticks of indecision. What happens? Boom, off to the races. What we have at the moment and what's just under construction on Facebook is that of the shooting star candlestick right at that area. And again, this is a very, very bearish candlestick. You don't want to see supply really controlling the market or that of Facebook at a critical area of a rising sort of support area, the bullish continuational type of level that we would pay attention to for Facebook to continue. So again, I think the Nasdaq is in a rather sort of precarious situation, and it's really surmised by Facebook. If Facebook begins to go at 157.82, you're most likely going to see tech follow suit. And that's also taking into consideration some of these relatively bearish sort of charts on Google, which right now seems to be retesting that of a past double top if you want to bring up the chart of Google in your own time. And also you've got Apple and Amazon that have sort of pseudo set up double tops or triple tops, but overwhelmingly they're still failing to break out to new all-time highs. So unless we see true commitment in these past historical market leaders, and then taking into consideration some of these bearish patterns, chart constructions that again are forming, I am a little bit cautious of potentially the market choosing to take the breakdown approach as opposed to, moving in unison and breaking out above those new all-time highs, or most recently printed all-time highs in the month of September and also August. One other stock that I wanted to show you as well, Twitter. You can see right here, unfortunately, no support at this rising trend line. This is the kiss over here. And what have we done? We've just rolled over from about $36, $37. We're trading at 28 at the moment. And this has got a very high, potential probability of moving all the way back down to roughly $21, $22 per share. That's the direction of Twitter. It is technically bearish. If I bring up these long-term simple moving averages, we're now below them. We're below the exponential moving averages. And even as we are oversold, the candlesticks are still suggesting weakness, all right, on the horizon for Twitter. If I do the same very quickly for Facebook, just to show you this as well, below the simple moving averages, below the exponential moving averages, we are starting to see a little bit of a recalibration in the oscillators. However, Stokes seems to be slowing at the midpoint. RSI is turning back down from the 50 point, and the MACD is not really helping this situation as the candlesticks are pushing back down, potentially to create, a new all-time low. Now, if I bring up that of Ford as well, I've spoken about this in Pro again. Ford intra-session yesterday on Friday actually printed a fresh 9-year low, which is troublesome to me when I hear those simple statistics. Look at this chart just here. This is a very critical area of support. This is a monthly chart, by the way. So we've got the daily chart, the weekly chart, then the monthly chart. This looks like that of a descending type of triangle. Pardon me. And it looks to me as though we've definitively broken below the $10 handle, the psychological round number. And when you have a look, pardon me, of all of this open space, all right, all of this open space in here, if we see these markets crack, there is a very high chance that Ford itself, as hard and painful as it is to say that, may be trading down at $7.33 at some point in 2018, if not in the first quarter of 2019 as well. So I just wanted to update you on that particular stock. Pardon me. I still have that dry throat that I'm still trying to overcome, as per the people or the participants in Pro found out yesterday. So on that note, I hope that market address, that market recap helped you as we move into the first trading week of October. Again, encourage you to have a look into Pro if you want to find more detailed analysis into our top 12 individual trade list over here on the left-hand side of my screen. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.